Welcome to the BF Anderson Technical Report for December 27th. Let's get right into the charts here. It's been a difficult period, a difficult quarter. Still think that the market is having a tough time here. I would keep any investing light at this time. I would continue to look for some type of reversal of this downtrend, but unfortunately we're really not seeing it yet. Here's the Nasdaq daily on a daily basis. You can see here this was the Christmas Eve pretty much massacre. You can see that the volume was pretty much the highest the volume has been in quite some time, all to the downside. So we've still got the moving averages going down. Both moving averages trend us down. Now we got a very big rally yesterday, and you can see though it came on fairly normal average volume. It wasn't like a rally that was exceptional and therefore probably should be ignored. Here is a weekly analysis of the Nasdaq. As you can see, the 35-week moving average is now turning down. We've also got, last week we had, down volume, record volume. We're still in, this is as of Wednesday, so we're still not seeing, volume to the upside that is getting my attention. Now, here's the HighLow Index. Remember what we're doing here. We're taking the number of new highs on the New York Stock Exchange, and we're dividing them by the number of new highs plus new lows. That indicator hit a new low yesterday. So what that means is that even though you're getting these rallies, they are to be suspect because we're not getting a lot of new highs. In fact, we're probably not getting any new highs, and we're getting a ton of new lows. You can see here on this graph here, which is the number of new lows on the New York Stock Exchange. And you can see here that, yesterday we had 616, the day before we had 1,256. The new lows are way outnumbering the new highs, therefore, things are difficult. Now, I went ahead and took away the actual index on this indicator. All I have here is the 10-month moving average compared to the 20-month moving average. Now, the reason I did this is that you can see these crosses much clearer without the index on the page. Now, the important thing to note here, for the first time in a while, we're starting to see the upper moving average turning down, and the lower moving average is actually flattening out. We really don't want to see a cross there. Let's see if it holds. Now, on to sentiment. Now, if you look at your report that's attached, which has something on there called the sentiment indicators, we have gotten down to a reading of 2, which is one of the lowest readings I've ever seen, which means that fear, this is extreme fear. Fear is going through the roof. So if you feel fearful about the market right now, so does everybody else. So in reality, this is a screaming buy signal. We're getting extreme readings here on the fear-greed index, which means that it's just too much fear out there. It's probably getting overdone. Now let's get into the top 5 just to kind of see what is happening here. Well, here's a company called Crocs. They make the rubber shoes, footwear. You can see that the stock is holding up above the moving averages and looks okay. Here's one that we really like. It's probably one of the few technology stocks out there acting really well. A company called Twilio, involved in a communication network that involves chat. Here's a pharmaceutical, a company called Vanda Pharmaceuticals. They announced a drug, some phase 2 drug tests. Stock really rallied but has then pulled back, but continues to stay within the moving averages. Here's another software company called Workday, and you can see it is a pretty similar pattern here. But believe it or not, these are the strongest looking patterns out there that I can find. I look at a lot of them, and very few of them look very good. Now here is a company also that we're interested in called Xilinx. Got above the lower moving average after a major correction. So all in all, what I'm saying is be careful here. Don't try to be a hero. Be aware of the fact that the market is in a downtrend, and we're going to get these counter trend rallies that could be meaningful, but so far I'm not seeing evidence to that. A 1,000-point rally on the Dow yesterday certainly is going to get a lot of attention from people, but I would say buyer beware. Let me know if you have any questions. Thank you.